with the aim, with the objective, with the target to attempt to complete past papers on ACCA platform. So I do recall in the last week, we did the complete exam of June 2024, March, June 24, where we attempted question 1, question 2, question 3, complete paper in 2 days. Similar approach we will be following today as well. So today we will be starting one question and they will extend the question, the part B of the paper tomorrow. Okay. So I'm just going to share my screen and so I have already opened up the ACCA practice platform. I hope you can see the practice platform screen. Um, June 24, something we did in our last exam session, last week sessions. So that's why it's on the top. Now let's start looking towards September, December 24. Okay. So let's start this September, December 24. Sorry, I need to sign in. I'm going to start the September, December 24, question 1. Mm. You should assume that today's date is 1st June 2024. You are a tech senior working for a firm of accountants. Your manager has asked you to carry out some work in relation to Lucia and her son, Ulf, who are new clients of your firm. New clients of your firm. So I'm repeating the theme, new clients of your firm. In addition to some ethical considerations which have been raised by your manager, advice is required in respect of. Advice is required in respect of. The sale of an asset that was acquired as a result of a gift. The personal taxes bond where profits are extracted from a company. The reliefs available in respect of trading loss of an unincorporated business. The VAT capital goods scheme. The VAT implications of purchasing components from overseas and the inheritance tax payable in respect of a death estate. The following exhibits available on the left-hand side of the screen provide information relevant to the question. Lucia, email from your manager. Lucia, tax affairs, letter from Lucia. Legacy received by Ulf, schedule from manager, work to be carried out, email from your manager. Lucia. I have opened up Lucia. Lucia and her adult son, Olf, are new clients of our firm. Whenever I heard this word, new clients of our firm, the first thing which came into my mind is there will be somewhat discussion around ethical aspects where we will be considering or giving consideration to them. Lucia had been unhappy at the way her previous tax advisors were critical of the technical competence of the local accountancy firm. However, she finally made the decision to change advisors because her previous advisor falsely claimed to have submitted documents relating to her personal tax affairs to HMRC when in reality they had lost them. We will be advising Lucia on her personal tax affairs and Ulf on a legacy he has received. Okay. Mm, Lucia tax affairs. Following our recent discussions, I have decided to incorporate my business. I will transfer all of my business to LRA Limited, a newly formed company on 1st April 2025. This thing gives me the hint about concept of incorporation relief with respect to it can be with respect to capital gains, it can be with respect to losses, etc. Sorry. In exchange, I will receive ordinary shares in LRA Limited as a consideration. I will own the whole of the company's ordinary share capital. You have confirmed that incorporation relief will be available such that this transaction will not give rise to an immediate capital gains tax liability. So the thing which I was under the impression that incorporation relief would be available and it's like there will be no capital gains tax liability. It is my intention to own and manage the company for the foreseeable future. It is my intention to own and manage the company for the foreseeable future. It means that there are very highly likely chances that she will continue to own the business. I look forward to receive your advice on my personal tax affairs and the future activities of the company, and I set out below the information you requested. My personal tax affairs: what disposal of waterside cottage. The only chargeable asset I have previously disposed of is a house, waterside cottage, which I sold on 1st January 2029 for, which I disposed of for 1st June 2024 for 229,000. Fine. My mother, Mika, gave the house to me on 1st November 2023 when its market value was 225. We submitted a joint claim to for gift holdover relief in respect of this gift. So they submitted a joint claim. My mother had always rented out the house as qualifying furnished holiday accommodation, but I decided to sell it in order to finance the expansion of my business. I did not live in the house. I did not live in the house at any time. So it means that there is no PPR type of stuff for her. One. Second, for her mother, it would not qualify as residential property because she not lived in the house, qualifying furnished holiday accommodation. My mother inherited waterside cottage from her uncle who purchased it for 130,000 on 1st November 2007. On 1st May 2025, when my mother inherited the house, it had a probate value of 216,000. Oh, so she received the house from her uncle, like mother Mika received the house from her mother, from her uncle, uh, who purchased it for 130. And when he transferred the house to her mother, who was Mika, the value of the house was 216. Results of my unincorporated business: 23-24 taxable trading profit, 22-23, 23-24, and 24-25 budgeted trading loss. Other business. My business is my only source of income. So she does not have any other source of income. That's one thing further to highlight. LRA Limited will purchase new business premises at a cost of 290,000 plus VAT. One of the rooms in the building representing 15% of building floor area will be rented to an unconnected business. This arrangement will continue for no more than 4 years. I expect LRA Limited to then need the whole of the building. Capital goods scheme and something, the theme which we discussed in our last class as well, if you recall. LRA will investigate the possibility of purchasing product components from a supplier based in the country of Palmyra. Okay. This would replace an existing supplier situated in the UK. So I can sense purchasing the goods or services from overseas country would be the point of discussion over here. Legacy received by Ulf. Uh, Schedule from your manager dated 1st January 2024. Legacy received by Ulf. Background: Ulf aunt Gunila died on 1st January on 1st March 2014. She left the whole of her estate to Ulf. Wow. Gunila is a widow whose husband Pietro had died on 1st December 2020. Both Gunila and Pietro had always been domiciled in the country of Baruna and had never been deemed UK domicile and had never been deemed UK domicile. That's important thing to highlight that both of them are supposed to pay UK IHT on their UK assets only. So whatever is their domicile is they are if they have any non UK assets, so there will be no UK IHT on those assets, right? On his death, Pietro left the whole of his estate to Gunila. He did not make any transfers during his lifetime. So, as per UK tax law, one thing which I'm aware is that there will be no UK IHT on Pietro death because he has transferred all of his estate to his wife, which is exempt, and he has not made any lifetime transfer as well. So, no UK IHT at all. You should note that there is no inheritance tax in Baruna and there is no double tax treaty between UK and Baruna. Gunila debt estate and lifetime gifts. The market value of assets owned by Gunila on 1st March 2024 were land and building, in land and building homes situated in Baruna, rental property situated in Baruna, farmland situated in the UK, farmland situated in the UK, personal possessions in Baruna, cash at bank accounts in Baruna, accounts in UK. Gunila acquired the farmland on 1st November 2020. It has been let to tenant farmers since that date. The agricultural value of the land on 1st March 2024 was 180,000. So this is the market value of the land, and this is the agricultural value of the land. Gunila only lifetime gift was to her niece Lisa on 1st June 20. The gift consisted of a house situated in UK with a market value of 210,000. Interesting story. Uh, what examiner wants me to do? Please carry out the following work. Professional conduct of Lucia, previous tax advisor. Send me an email explaining the fundamental principles set out in ACCA Professional Code of Ethics and Conduct, which Lucia previous tax advisors appear to have breached. So, do you really believe that they breached any of the fundamental code of ethics? I do. I have personal feeling like they do miss out professional competence, professional behavior, stuff like that they are missing. But let's see. We'll discuss it more. Please prepare a memorandum for Lucia client file consisting the following work to be set out. Lucia personal tax affairs. Chargeable gain on the sale of waterside cottage. Explain with supporting calculations. The word is explain with supporting calculations. Explain with supporting calculations. It means mainly you have to explain with supporting calculations where necessary. Lucia post-tax income for the tax year 25-26. Calculate Lucia expected post-tax income by reference to the information in Exhibit 2 and additional information below. Use a figure of 79,000 for both the account profit and taxable trading profit of LRA Limited for the year ending 31st March 2026. The only adjustment to be made to this figure are in respect of amounts paid to Lucia. LRA Limited will have no other income or chargeable gains. In the tax year 25-26, Lucia will be paid a gross salary of 70,000 together with a dividend equal to LRA Limited expected post-tax profits. Expected post-tax profits. In the year ending 31st March 26, the NIC contributions payable by LRA in respect of Lucia existing employees will exceed the employment allowance. You should ignore any relief which may be available in respect to budgeted trading loss for the year ended 31st March 25 when calculating Lucia expected post-tax income. So if there is any loss relief type of stuff, so that is assumed to be ignored while doing this work. Relief available in respect of Lucia budgeted trading loss, Exhibit 2. Explain the reliefs available both now and in future in respect of Lucia budgeted trading loss for the tax year 24-25 and compare the post-tax savings available. You should note the following additional information. Opening year loss is not available in respect of this loss. Opening year loss is not available in respect of this loss. You are not to consider terminal loss as I have already carried out the necessary work in respect of this relief. You should ignore NIC. Future activities of LRA Limited. Um, LRA Limited will register for VAT on 1st April 2025. All of its turnover will be standard rated. For commercial reasons, LRA Limited will not opt the tax to the new business premises. The capital goods scheme will apply to the new premises. Recovery of input tax in respect of new premises. Explain when LRA will be able to recover the input tax in respect of the new premises and any amount which the company will be unable to recover. Any amount which company will be unable to recover. Purchase from of components from overseas. Explain the VAT and cash flow implications for LRA Limited of purchasing components from a supplier based in the country of Palmyra. Ulf inheritance from Gunila. Prepare a schedule to be sent to Ulf consisting of the calculation of IHT liability arising in the UK as a result of Gunila death and explain and an explanation of whether or not agricultural property relief will be available. Okay. So if you look for part A, there is no such thing required, nothing like to be of any memorandum or etc. etc. That's a simple, straightforward answer. But for part B, you are supposed to prepare a memorandum, and for part C, you are supposed to prepare a schedule. Okay. So let's start writing the answer. Let me look into the requirement. Split of marks, respond to the instructions in the email, professor will be awarded, skepticism, etc., etc., etc. Okay. Word processor. Send an email. Send an email. Sorry, I missed that. So for part A, you are supposed to send an email. Email from your manager. So it's like you are responding to, from tech senior. Subject. I like to use this one as a subject of email. June 2024. Okay. Let me look for the complaints of Lucia. Lucia and her adult son are new client of our firm. Lucia had been unhappy the way her previous tax advisors were critical of the technical competence of other local accountancy firms. However, she finally made the decision to change advisors because her previous advisor falsely claimed to have submitted documents relating to her personal tax affairs to HMRC when in reality they had lost them. We will be advising Lucia on her personal and business tax affairs and Ulf on a legacy he has received. Okay. Lucia, previous tax advisors appear to have failed to comply with the following fundamental principles. Integrity, integrity. Members should be honest in their professional behavior, relationships. They were dishonest when they claimed to have submitted documents to HMRC, professional competence and due care. Professional competence and due care. They did not take sufficient care of documents relating to Lucia, such that they lost them. Confidentiality. The loss of Lucia documents means that the confidentiality of those documents may not have been maintained. Professional behavior. Members should avoid conduct which discredits the profession. Criticizing the technical competence of other firms is unprofessional and consequently affects the reputation of the profession. Prepare a memorandum for Lucia client file. Prepare a memorandum for Lucia client file. Subject. Chargeable gain on the sale of waterside cottage. Explain with supporting calculations how the chargeable gain on Lucia sale of waterside cottage be calculated. Just a sec. Okay, so chargeable gain on the sale of waterside cottage. So we discussed about it. Let me close. No, as such, need for this. Now this is relevant. Market value was 225 holdover. My mother always, but I decided to sell in order to finance. Did not live in the house. Okay. Mika base cost in the property was its probate value in May 2015 was of 216,000 when she inherited it from her uncle. Mika chargeable gain on the gift to Lucia was 225,000, the market value at time of gift, minus 216,000, the probate value, which translates into somewhat 9,000. $9,000. The market value of property on 1st November 2023 less Mika's base cost. The gain was subject to gift holdover relief claim and was held over. Gift holdover was available as the cottage qualifies for uh, furnished holiday accommodation. Lucia base cost in the property was 216,000 calculated as market value minus amount of gain. The market value of property when she received it from Mika less chargeable gain which arose on that gift. Lucia's chargeable gain was 13,000. Her sales proceeds less base cost. Um, Lucia post-tax income for the tax year 25-26. Calculate Lucia expected post-tax income by reference to the information in Exhibit 2 and additional information below. Use a figure of 79,000 for both the account profit and taxable trading profit of LRA Limited for the year ending 31st March 2026. The only adjustment is amounts paid to Lucia. LRA will not have any other income or chargeable gains. Mm. LRA will have no other income or chargeable gains. In the tax year 25-26, Lucia will be paid gross salary of 70,000 together with a dividend equal to ERA Limited expected post-tax profit. Dividend equal to LRA Limited expected post-tax profit. In the year ending 31st March, Class 1 NIC will be payable in respect of Lucia existing employees will exceed the employment allowance. You should ignore any relief which may be available, right? Okay. So first, the income taxable trading profits of Lucia Limited, sorry, of LRA Limited is 79,000, right? Salary, salary, revised or adjusted trading profit amount, 595. Corporation tax at the rate 19%. Uh, 'Salary', 12,570 personal allowance. 37,700 at the rate 20%. That somewhat works out to be this. 57 minus 40%, then all this amount falls into 0%. as dividend exemption is up to 500. Income tax liability. Class 1 employee NIC. Up till 12,570, the tax is at 0%. Amount is 0. Then 50270 minus 37,700 at the rate 12%. Then salary of 70 minus 2%. Total class 1 employee NIC. Five zero 270 minus 12,570. Done. So I first calculated the dividend to be received by him. Then I calculated the income tax. Then I calculated NIC. Last, not the least, post-tax income for Lucia. Um, I am like, this is Lucia's total income, of which she is supposed to pay income tax of this amount, NIC of this amount, post-tax income amount 50132. So I hope that would be pretty much clear. That was not technical, but the way you need to think was interesting in this part, at least. Relief available in respect of budgeted trading loss. Explain the reliefs available both now and in future in respect of Lucia Limited Lucia budgeted trading loss for the tax year 25-26 and compare the possible tax savings available. You should not, you should note the following additional information. Opening year loss relief is not available. You are not to consider terminal loss relief. You should ignore NICs. Explain the reliefs available both now and in future. The reliefs available now. Lucia could offset the budgeted trading loss for the tax year 24-25 against her total income of the tax year 24-25 and dot 23-24. The first thing. Second thing, once a claim has been made to offset the loss against her total income for a tax year, a further claim could be made to relieve her chargeable same year. So these are the reliefs which are available now. What are the reliefs available to Lucia in future? Lucia can carry forward the trading loss for relief in future. This is because Lucia will have transferred her unincorporated business to a company wholly or mainly wholly or mainly in exchange of the shares in that company. Third, the loss would then be offset against Lucia's income from LRA Limited in the tax year 25-26, provided Lucia retains the shares throughout the tax year. Lucia Limited would be able to adjust the loss with her employment income of 70,000 as dividend income would already be covered under dividend nil rate band. Right. So this is the relief available in future. Now, so I just explained what are the reliefs available today, what are the reliefs available in future, and compare the possible tax savings available. Okay. Now I'm going to, so first I explained what are the reliefs available. Now I'm going to have word on the comparison of reliefs. Comparison of reliefs. So first relief, relief in tax year 24-25. Lucia has no income or chargeable gains in this tax year such that no relief for the loss is possible. Offset against total income of the tax year 23-24. So under this option, the loss can be against offset the loss against total income of 23-24. It would use 30,000 of trading loss and reduce the total income of 2023-24 to nil. This results in tax savings of this results in income tax savings of 3486. The remainder of 10,000 of trading loss can then be offset against Lucia employment income from LRA Limited in the tax year 25-26. This would reduce income tax liability by or against chargeable gain on the sale of waterside cottage. This would result in a capital gains tax savings of 13,000 was the gain amount, 3,000 of annual exemption. And since it is a residential property, i.e. cottage, so there will be tax savings of 1,800. So that was offset with prior year option. For tax relief in the tax year 25-26. Offset the loss against Lucia employment income from LRA Limited would reduce income tax liability by 40,000 minus, okay, 19,730 multiplied by 40% plus 20270 multiplied by 20%. So there will be a total tax savings of 11,946. Explain in respect and compare the possible tax savings. So a conclusion. Conclusion. Lucia could obtain immediate relief for the whole of the loss if she were to offset it against her total income of the tax year 23-24 and the chargeable gain on the sale of waterside cottage. However, if she is willing to delay the tax relief, for the whole of the loss if she were to offset it against her total income of the tax year. She is willing to delay the relief for whole of the, sorry, if she is willing to delay the relief available to her, she will achieve a greater tax savings by relieving the whole of the loss against she derives from LRA Limited in tax year 25-26. Right. So the main theme was that if goes for incorporation relief, incorporation loss relief, then that would be the best available option. So from a VAT perspective, you should note the following additional information. LRA Limited will register for VAT on 1st April 25. All of its turnover will be standard rated. For commercial reasons, LRA Limited will not opt to tax the new business premises. The capital goods scheme will apply to the new premises. Okay. So first thing to talk about, recovery of input tax in respect of new premises. Recovery of input tax in respect of new premises. Recovery of input tax in respect of new premises. Lucia LRA Limited will purchase the new business premises at a cost of 290 plus VAT. Since the cost of property is more than 250,000, hence the capital goods scheme would apply. Point number one. Hence capital goods scheme would apply. Point number one. Point number two. Um, One room in the building representing 15% will be rented out to an unconnected business. This arrangement will continue for uh, this arrangement will continue for no more than 4 years, as I expect LRA Limited to then need the whole of the building. So for 4 years, taxable percentage now would remain same at 85, and after 4 years the taxable percentage now would be changed to 100%. LRA will investigate the possibility of purchasing the product components from a supplier based in the country of Palmyra. This would replace an existing supplier situated in the UK. So the reverse charge procedure would apply for purchasing goods from overseas. Recovery of input tax in respect of new premises. For both the situations, the word is explain. Explain. So I'm supposed to explain. Okay. Initially, LRA Limited for the purpose of making taxable supplies. This is because renting out of building is an exempt supply where no option to tax the building has been opted. LRA Limited will be able to recover input tax of 290,000 multiplied by 20%, which translates into 58,000, then 58,000 multiplied by 85%, which works out to be 49,300 in the quarter in which it purchased the property. During its first 10 years of ownership of the building, LRA Limited will be able to recover additional input tax, would be able to recover additional input tax once it is using the whole of the for its business. This additional amount would be this additional amount would be 870 for each remaining year of the 10-year period. This amount should be included in the VAT return accordingly. LRA Limited will not be able to recover 870 for each year for which it rents out the building. As per available information, so I am like at the moment we will not be able to recover. Purchase of components from overseas. LRA Limited would be required to report VAT payable at the standard rate in respect of the goods purchased it would be included as output VAT on the return for the period in which components are imported. LRA Limited will be able to reclaim an equal amount of input tax in same VAT return. This is because the components relates to its standard rated trade and not to the renting of premises. Accordingly, the purchase of components from overseas would from overseas would not have would have no net VAT cost and no cash flow implications. So, one interesting fact about this part of the requirement is the requirement in totality is of 8 marks. Now, it's your acumen uh, which will guide you how much marks to allocate for which part. So, like, for first part, are we supposed to allocate uh, more marks? Are we supposed to allocate less marks for first part of this part D? That is basically your commercial acumen. You need to think, uh, like, we need to identify how much it could carry. Ulf inheritance from Gunila. Prepare a schedule to be sent to Ulf consisting of a calculation of IHT liability arising in the UK as a result of Gulina death, explanation of whether or not agricultural property relief is available. Okay. Mm, IHT liability arising as a result of Gunila death. Inheritance tax liability arising in UK as a result of Gunila death an explanation of whether or not agricultural property relief is available. Is not available as the farmland is letted out and Gunila inheritance tax liability as a result of Gunila death. Tenanted farmland in UK for 70,000, cash at bank in UK account, Gunila nil rate band, available NRB for a state, NRB transferred from Pytro amount chargeable to inheritance tax. Thirty-six 800 is the amount which is chargeable to IHT. I'm done. Uh, Interesting question. I'm not sure about you, but some of the good concepts, some of the good discussions. Hmm. So I'm just saving it. So I really hope you guys would have enjoyed the question. Learning for you guys in the question. For me, it was. So thank you very much for joining the session. Hope it would be a bit fruitful for you. I have saved the file. Uh, Thank you very much. I'll upload the file in the drive shortly. Thank you very much for staying with me. See you guys tomorrow with section B of this paper. In the meanwhile, take care of yourselves. Thank you very much. Allah Hafiz.